You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Welcome to the AZREIA Show. This is our weekly dose of real estate news here for our Arizona residents. So I just want to welcome you to the show, man. If you guys do not know who Jamison Manwaring is, you haven't been in the multifamily space, right? So Jameson, welcome to the show, man. Give us a brief introduction of who you are.
Yeah, great to be here. We have a long history working with AZREIA. Since we started, we launched 7 years ago, and AZREIA helped us with our first offering. Had several investors came from the AZREIA group, and have always admired the engagement of the group that's here and their knowledge and the education that you guys do. But yeah, we focus on multifamily development, and my background is investing, and so I really take that investment mindset in everything that we do. My business partner, he's been in multifamily for 35 years in Phoenix, so he's more the development side. And so we're a multifamily investment company, and a few years ago we brought all of our property management and maintenance and construction in-house, so we have a pretty big company now. Well, we're probably 40 people now, so to me that feels, it's a lot. But we try to just do great work. We try to have very happy residents who live with us, and we like really good deals. We don't like to overpay for stuff, and what we saw in the last cycle, we saw prices get pretty high, and we really put on the brakes in 2022. We didn't buy anything last year. In 24, we only bought 2 buildings in 23 and in 22, and now this year we're back. We've acquired 4 assets in 25, and we have another one in the pipeline, and we're seeing great opportunities out there. And when things get tough, as we're in right now with multifamily, that's really the time to go out and you can find good deals, well-located properties. So that's what we're really excited about right now.
Okay. So let me circle back real quick. So this is Jamison Manwaring with Neighborhood Ventures, right? Here in Arizona, you guys got started with crowdfunding, right? And now you're really buying quite a few apartments here in the Valley.
Yeah, our first one was a 10-unit building in Tempe. It's $1 million, 100,000 a unit. Simple math,
Yeah. Right.
And we thought, okay, we renovate it, maybe we can sell it for 150. And that's what we ended up doing. It took us about 2.5 years. Okay. We raised $500,000 through crowdfunding. We had over 100 investors in it, and
it sounds like it's hectic.
It is hectic, yeah. Because our last fundraise, we raised $5.5 million, and I'd say that fundraise was easier than me $500,000 the first time doing anything.
Right.
But we learned a lot. We've grown now to most of our capital, like 90% of our capital does come from high net worth investment groups and individuals, but we continue to raise money from Arizona residents through crowdfunding, and they don't have to be accredited investors. It's a $5,000 minimum investment, and we continue to offer that. But yeah, we started, that deal was in 2018.
Okay.
We've done 20 offerings since then in total.
Okay. Well, before we go further, let's talk about that first deal, right?
Yeah.
Because what were you doing prior to who you are now and what you're doing now?
I was a finance major, and I wanted to be a trader on Wall Street.
Okay.
So I got an internship at an investment bank there, and then I ended up getting a full-time job offer. I went to school in Utah, went to New York, worked at Goldman Sachs, and I was like, this is what I want to do for the rest of my life. And 80, 90-hour weeks of work. And I mean, it's 7 to 7 every day, plus Saturday. So it ends up being, you have no life. And in New York, that's just kind of what everyone does. But I knew long term that's not what I would want to do.
Okay.
When I was out there, my dad is a real estate agent and broker. And he shot me a deal. He said, hey, this is an interesting deal. And it was a hotel that had been operating for a long time near my hometown, and the owners had gotten sick, and their kids didn't want us to run it anymore,
Mm-hmm.
and my dad got the listing.
Okay.
And I can't remember even what I bought it for, but it was like $100,000 for
Right,
you know
right.
this almost kind of like abandoned hotel. It had been closed for 6 months, and it just kind of got me excited. I was like, oh, real estate. I haven't invested in real estate for a while. I've just been doing. I covered software companies, software stocks.
Okay.
And I ended up buying it, and then from New York, remote, having a team go in and renovate it, and then I found a manager, and it was just a lot of fun, honestly.
Mm-hmm.
And I wasn't even thinking necessarily about the money. I was just more like, oh, this could be a cute place. Let's
Right.
do this. Let's renovate it this way. It was 10 units, and it had a house for the manager, and it was perfect for like a family who lived in town. They could just live there and then manage it part-time. And that's what I found. And it just started doing really good.
That's cool.
And it was
Okay.
fun. And then the manager asked if she could buy it from me. And I was
Uh-huh.
like, sure. And figured it out. And she was able to get a loan from a bank because at that point we'd had some financials for 2 or 3 years. And
Right,
I think
okay.
I held it for 2 years. And I got sold it for a whole lot more than I bought it for.
Mm-hmm.
It was something more like, I think I bought it for $10,000 a door and sold it for $25,000 a door or something. And it
Okay.
was still a
Man.
great deal for her.
Yeah,
too.
great
Yeah.
upside. Yeah.
Great, and I was just like, okay, that was fun. And also in the meantime, I had moved out to Arizona. One of the companies that I covered was LifeLock.
Okay.
So they're a Tempe-based technology
Mhm.
company. I worked on their IPO in 2012, and then in 2015 they hired me full time to run their investor relations. So I moved out. I was ready to get out of New York. Got out to Arizona. Loved it. 2 years later, LifeLock got bought out by a big security company in California. And it was around that same time that this building in Idaho was also selling, and so I had some cash coming
Okay.
my way. And I was looking at buildings to buy in Phoenix, and for some reason, just kind of naturally, I was like, okay, I have some cash, I'm buying a building. I'm buying some
Right,
personal
right.
real estate. And one of the buildings I looked at was offered by ABI Multifamily. And I told the guy, I'm also interested in crowdfunding. I'd be interested to see if maybe I could put some money in and raise some money to crowdfunding to buy this. And he said, well, my boss talks about crowdfunding all the time. And I said, well, what's your boss's name? And he said, John Kobrowski. And I just jotted his name down. And then later that day, I sent him an email. And I just told him what I was interested in doing. He said, well, we should talk. And we ended up getting a coffee, and it ended up turning to 3 hours. And we've been business partners 8 years now since
Excellent.
then.
Excellent.
Good stuff.
Yeah.
And he said, well, I'm interested in doing the same thing. In fact, I have a friend that wants to sell this building. It's a little 10-unit building in Tempe. That could be our first building. I was like, let's do it. I'll raise the money. You be the real estate guy, and I'll do all the financial stuff. And he's like, let's do it.
Right.
So
Power
that was
of partnership.
yeah, and
Great story.
I never could have done it alone, especially as you guys know, and the folks who've done any real estate know, there is so much to it, and the problems that come up, having some gray hair and some experience, and having gone it through, which John has helped tremendously. So it's been a really great partnership.
So
Perfect.
for people, you have a great background, especially in the investment world, Wall Street. So someone listening is like, oh, easy to raise money, the guy like that, right? Like, it's very impressive. So someone that's out there just needing to raise money, getting into real estate, like, what are some tips you would give someone to raise some money?
Yeah, that's the funny thing is the people who were my clients before at Goldman Sachs and LifeLock, they have no interest in investing in a building in Tempe. They're institutional investors who invest in stocks and invest in technology companies. So when I sent out some stuff to them, I got a lot of thumbs up on LinkedIn. Oh, that's cool, but there weren't people saying, "Hey, here's my $50,000,"
Yep.
And I did get a few coworkers who saw it and they're like, "Oh, this is cool. I do want to put some money in and put some money that way." But the big investors that I was working with were completely different space.
Got it.
Right.
But I knew how to talk to investors. I knew how to look at an investment and say, this is how we're going to make money on this. This is how you as an investor with this whole period would do it. but it was a whole different experience, and what is called, the retail investor, who are not institutions, not necessarily doing this full time, although some do at home, but they're investing their own money. That's who we had to raise money from, and that was kind of a new experience. It was also more rewarding, though, because the people who I was working with before, they weren't managing their own money. They were just trying to make really wealthy people more wealthy. So this was more having real conversations about people who've saved their money, worked hard. How do they get a good return on that in a safe way?
So how did you target those people, right? Because you had two different dynamics. You had the Wall Street people, and then you had, the traditional crowdfunding people. How did you find those crowdfunders?
It was almost like building a consumer business that needed to get, talk to 1,000 people, and 1 out of 10 would invest. And that's what it felt like. So we just started going on the road, and we also, John and I, told each other we're not going to let any of our wealthy friends write a big check for us. Okay. We want to see if we can build a business from ground up, because it was more about learning and seeing how this would go. So we did several events at AZREIA. We did events at our office, and we sent out mailers, and we built an email list from people who we knew. But then we also started doing stuff on social media. We put together some really cool content where we walked through the property and we talked about what we were going to do with it. 5-6 minute videos, and a couple of those kind of went viral on YouTube. Okay. And
grassroots effort.
Yeah. When I looked at like our first deal, the 100 investors that ended up investing, they were from all over, all the work that we had done. And then when we're done, we're like, and that was a lot of work to just raise $500,000. But then we did another deal where we needed to raise $600,000, and it took us 6 months to raise the $500,000. We had a seller who was willing to wait for us on that first deal. So that's how we did it. But then we got another deal, and we're like, hey, this is a nice deal. We need to raise a little more. It was a 16-unit building. And we launched it, and now we had a list. We had a couple thousand, and we ended up funding that in 3 months.
Okay. And now you're given, you have successful Tempe building. And
we have that track record, and we can start to show, hey, this is building 2. Then the third one that we did, we raised that in like 4 weeks. And the fourth one, and it just got that momentum. And then what was also big is when we started sending money back to those investors from the rent. Yeah. So once the renovation was done, and it took us about 7-8 months to do the renovation, I think it was month 10, we started sending them a check, and it was an automatic deposit. Even if it was $50, people were like, oh, this thing is working. This is cash flow performing.
Especially with the people that put in $1,000.
Right.
Like, oh, that's huge.
Yeah.
That's great. Yeah. Can you talk about the crowdfunding just for those listening that might not know what it is or how it works and how it operates?
Yeah, so crowdfunding, when I was getting into this business, was kind of this hot topic around, now there's a new way to raise capital for this very capital-intensive business, which is real estate. And so what it allowed was folks who were not accredited to be able to invest, and for people who have offerings, who are raising capital, that they could advertise those offerings, because that's a big restriction that the government has in place, is you being able to publicly advertise them. Right. Online, on social media, on Google, YouTube, and so what crowdfunding allows was, you can publicly disseminate your offering, because it's not only available to accredited investors, but it's open to everyone. And that's why the government restricts the advertising, because most people can't invest in these offerings, so they don't want them in people's faces. Right. So you have to do your advertising just to accredited investors. So with crowdfunding, it was like, hey, let's do some cool content, let's share this, and it's a new way to raise capital. And maybe you have 300-400 investors, but they all put in $5,000-$10,000, and that's how you raise capital. So that was kind of the idea originally. And there were companies like Realty Mogul, Realty Shares, CrowdStreet, that a bunch of them had created these platforms which would essentially, if you were a developer, real estate developer, you could put your offering online and then they would crowdfund for you and raise a couple $1 million for you or whatever. And that was the idea.
Okay.
So here we are in 2025 today, and what I can say about crowdfunding is it is still out there, but it never became what people thought
it was going to be. Okay.
At the end of the day, and this is my commentary, at the end of the day, for someone to write a check, whether it be $1,000 or $100,000, is a big deal for them. And there's a lot of work and education that has to take place. And so if you're going to go try to raise a lot of capital in our business and you want to buy bigger buildings, it just gets really hard to do that with smaller checks. You have to start getting larger checks. And so it still exists. A few of those companies, they don't exist anymore. There's, for us, we've kind of evolved where we do still do crowdfunding, but we've also evolved beyond it. If you're an Arizona resident, Arizona has a law that is an intrastate law, which is only available to deals in Arizona. All your investors have to be in Arizona. Your banking has to be done in Arizona.
Okay.
But if you do that, you can raise money from non-accredited investors. They can invest up to $10,000 on a deal. And it's a really simple process.
Wow.
And we do that on all of our deals. We raise $1 million, couple $1 million from Arizona residents up to $10,000. To raise money nationally from non-accredited investors is really complicated. Without getting into it, you have to go through this portal system. The portals have to be approved. You have to pay all these fees, and it ends up, it's hard to raise capital that way.
Okay.
So what's it called that you're doing here in Arizona?
It's called the Arizona Intrastate Crowdfunding Law. It was passed 2014.
Okay.
And
is there a maximum, like you can only raise $1 million or $10 million?
It started at $1 million, and then they ended up taking it up, revising the law 2 years later. It's $5 million now.
Great.
Okay.
And you can do every offering, and it can be open for 12 months, the offering. And then you can do a new offering the next year if you want to, but you can raise up to $5 million per offering.
Wow. So I think the national one, I could be wrong here, I think Grant Cardone did something like that.
Yeah.
It made me think about the mindset of the people investing, right? So now, is it kind of risky, or was it hard? Hey, if I'm giving you $5,000, like they're not experienced, like if their tire pops, that might be the money they need back.
Right.
Yeah.
So did you deal with that?
And that's part of why there's the restriction. They can only invest $10,000.
God.
Okay.
Because what they don't want to have happen is for grandma to put in her last $100,000. Yeah. But grandma could put in $10,000, and then she can keep her, the rest.
Right.
So there's safeguards in place there.
Good. Okay.
And like Grant Cardone, he used what's called a Reg A Plus offering because he had such a large following online already from his other businesses. And from what I understand, they've done it. It hasn't done that well for them as well as they thought, but I think they're still doing an offering that way. We did have a Reg A Plus at one point also, but we've gone to a Reg D offering, which is just accredited investors. Because it's all about ROI and the time spent on the legal costs and doing that structure. If there isn't enough capital coming in to make it worth it, then you have to make that decision. That's what we've decided now. But the great thing is our projects are all in Arizona. We plan to be here for a long time. We will get some project outside of Arizona at some point too, but we can use the Arizona intrastate law and continue to have local investors, and we love that.
I love it. So going to what you said earlier, maybe it was before the show, buying time, right? We haven't heard that in a while. It's been kind of weird 3 years that we've been dealing with. Like you put your pencil down for a year, I think you said, right? So, so where are we at? What's going on?
Well, we have an advantage because we have nearly 1,000 units that are our own that are across the valley that we run. So we're able to see on a monthly basis, when are people paying their rent? Are people behind? How are lease ups going? What's occupancy look like? And I was at a Zillow Rentals conference a few weeks ago in Austin, And Austin, like Phoenix, has had a lot of new supply of multifamily come on the market, but they aren't absorbing it as fast as we are. So there's a lot of anxiety from property managers in Austin. I talked to one property manager that, the lease up has just been really, really difficult. Their occupancy was like 40%. It was supposed to be, leased up by then. We're not seeing that here because we still have so much demand. So our buildings that are stabilized are still full. People are paying rent. We haven't been able to take rents up for 2.5 years.
Right.
Yeah.
But they're
But
paying
it's
rent.
stable.
And and they're cash flowing, and that's not the case across the country. There was one of the property managers I talked to at that event. They have a property in Jacksonville that was 25% occupied, and they're like, we don't know what to do.
Wow.
And I was like, dang, Jacksonville, I didn't know.
What kind of buildings are yours?
We're
You cater to?
We're garden style. Our smallest building is 20 units all the way up to 130 units.
Great.
And we have some workforce housing, and then we have some that are nicer townhome style, 3-bed, 2-bath with a garage. So we're kind of we kind of touch it all. And so the properties that are in lease up in Phoenix are leasing up, but they are leasing up slower. And that's due to all of the supply that we've had over the past 3 years. And as we looked out at the conveyor belt of when new supply is going to keep coming and end, we're really at the end of the new supply.
Okay.
We thought that might have hit the end middle of this year, but there's been some construction delays, permit delays. So it's another 6 or 12 months is what it looks like. Once that gets absorbed and gets taken out to market, then we go into a period of a few years where there's going to be very little supply.
So,
very little new construction. And that's where some of this gets caught up.
Right.
But to put into perspective, typically we absorb 12,000 units a year, apartment units a year in the Phoenix Metro. We absorbed 12,000 in the first 6 months of this year. So we are absorbing a lot of units.
now, is that more for your range of apartments? Because we had the Multi-Housing Association on maybe like last year, and we were oversaturated, but more maybe towards the luxury side.
Sure.
You know what I mean? Is that correct, or different product?
The Class A that's coming, out of the ground is the lease up is happening, but it's slow. But it is getting absorbed here better than in other markets.
Got it.
Okay.
The stabilized properties like the ones most of the ones that we have, they're 92% full.
Great.
The lease up ones are more like between 45 and 55 as they're leasing up. But we still have such demand here as people move here that we're expecting that those units will get leased up, and then we go into a period where we can start taking rents up again. But it's another 6 to 12 months is what it's looking like. And I dig into what the experts are saying, and they really dig into the data. Folks from CoStar and who are looking at the new construction data. But what we know is new construction falls off a cliff, because we've had all these new units that were planned and built during when interest rates were low, but that era is going to an end. So if you can focus on operations right now, you can run the buildings well, get through this lull. Once you get through it, then I think you're going to be in a really nice position as we get over that hump.
So basically, building's going to slow down.
Yep.
We're going to absorb everything, and it's going to be back to we need some more demand.
Yep.
And then we're actually falling off a cliff with new supply for a long time,
Right.
for a while.
Right.
Why?
Because all the new supply that we've received was planned when we had 3% interest rates, and then it takes 2-3 years to get out of the ground. So the stuff that we're seeing here is just at the very end of that cycle, and
so no one's going to want to build again.
Yeah, when there's the lot we were talking about that's across from our office that they demolished a school to build 250 units. That doesn't pencil today.
Got it.
Right,
I hear
right.
you.
And so that's across the board, and so it'll take a while before new projects will pencil, both from a rent standpoint and an interest rate standpoint.
So where do you think we need to be projected as far as interest rates in order for new builds to come back? Do we need to be at 3.5%, 4% rates?
Yeah, and we started to hit under 4% on the 10-year this last week, and then it's ticked up a bit. The folks who dig into this, really, the 3.5% on the 10-year is like their benchmark. Once they feel like once we get to that range, it opens things up again. But we've already started to see stuff open up in the last 3-4 months. There's been a feeling of renewed optimism that the fundamentals for housing, the fundamentals for rental housing are so strong, especially in markets like Phoenix that are growth markets, that, hey, that's a place I want to own.
Okay. So I know some of your crowdfunding offerings, you can get in, well, you used to be able to get in as low as $1,000, right? What's the mindset of those entry-level crowdfunding participants? Like, how much teaching and education you have to do with them? Because I know it's different versus the Reg D, because these guys are already investors, have some assets to play with.
Yeah, and that's what makes it fun, is you can bring along some smaller investors or newer investors, and then they've grown into investors who are investing $25,000 or $50,000 into our offerings. And so that's kind of how we look at it from a business standpoint, is just because someone wants to only invest $5,000 doesn't mean that's all they have.
Right.
That is
maybe the tickler. Let me see what they do with this.
And it's if put myself in their shoes, to write a $50,000 check is a big deal, but to write a $5,000 check and kind of see how it goes, that's been a good part of our business that we didn't expect. Is a lot of those people have end up growing their portfolios with us. That we have a lot of people that have several $100,000 with us that have written $100,000 or $10,000 checks many times on each of our offerings. So, but we spend a lot of time doing stuff like this. We talk about the market, we talk about rents. The good thing with housing is people understand it kind of intuitively.
Right.
And I think that's important, that you need to invest in something you understand. You need to invest in something that you want to dig into. And so we spend a lot of time talking about it, and then they spend a lot of time on their own time looking at the information as well. The nice part with crowdfunding, though, is it's very tech enabled. So we built a platform where they place their investment, where they come back in and they can track their investment, where they can download the K1, where they can see their cash coming in. And that was a big part of our company as we launched.
Okay.
That, to have, we sent out 1,500 K1s last year.
Wow.
So it's a lot. We uploaded 1,500 K1s to our portal. We could never do that manually. So there has to be a software technology component that's helped us. And it's the same thing with education. Like you have to do it at scale. So do podcasts, we do a weekly newsletter, we put it out there. You just don't have the ability to talk to every investor like you do if you're doing a smaller syndication.
Okay. But if you don't mind sharing, what software are you guys using, or is it internally built?
We built our own.
Okay.
So I hired my nephew, and 3.5 years ago, and now we're really happy with what we have. But we built it in house.
Gotcha. It's cool how you just grow as a company, build assets within your company.
Yeah.
This is so great. Yeah, good
but
for you guys.
The software is actually called Palm Tree software. So we do have a few other folks who raise money who use it.
Okay.
And we haven't really pushed that much, but they were friends of ours that wanted to use it. And at some point we may push it more, but it is something that is available for other folks to use. So it's called Palm Tree.
Okay.
So what's the opportunity? That's our 2012
I better not hit that
off. What's the opportunity now for Phoenix investors or people wanting to invest in Arizona? Like, what are we looking for? What's hot?
Well, I had a brother who sold a business earlier this year, and he's not a multifamily guy, but we spent a lot of time chatting about, how's he going to allocate some of his capital. I think right now, if you have some capital, it's a great time to buy multifamily because we're in the downside of the cycle. We rode a wave up, and now we're on the downside. So if you can buy well-located multifamily, you can buy newer property, you can buy some property that's been renovated, that's cash flowing, you're going to be really pleased when we ride that cycle back up. And we've always focused on, we're value people. You make your money at the purchase with real estate. There's only so much you can do with real estate, right? You can renovate it, you can reposition it, but at the end of the day, you're going to be in that same location, you're going to be in that same city. So if you can go in and buy some properties at a good price, which is where we're at right now, we're the most active buyer in the Phoenix market today for multifamily. We've acquired these 4 assets, and that's not saying that much, but we're the most active because other groups, they're either trying to work out their problems of a few years ago, or they're not able to raise capital because of the problems a few years ago or whatever. So right now is a great opportunity. When I wake up, I'm juiced because I'm like, hey, Phoenix is a great market. We can buy stuff that was 40% off from 2-3 years ago that we were trying to buy 2-3 years ago, and we even liked it then, and now it's 40% below that.
So are these, I know like a lot of people got stuck, so are these like 40% off, like, but don't they have, you know, debt on these properties that they're trying to get out of? Like, are you renegotiating something, or what's
I'll just give an example of our last deal. It's on Maryland and 7th Street. Love the area.
Perfect. Yeah, for sure.
1960s, 2-level, 71 units. And the 71 units,
71 on 7th Street in Maryland?
Yeah.
I'm trying to think of.
You've probably driven by it. Called Maryland Greens.
Maryland Greens,
Yeah. And the group bought it 2022 for $18 million. They planned to renovate it. Things started getting weird for the group. They started having some problems. They were good at raising money, but they weren't good operators. And so they actually never renovated anything. They started to do a little bit, and they did, let me backtrack, they did 12 units out of the 71, and they didn't do them very well. They didn't take rents up. The lender did a forced sell. We looked at it last year, and they owed $12.5 million in debt. They had bought it for 18. We looked at it and we said, we'll give around 11, and they weren't able to sell it for the debt amount.
And this was, are you speaking with the owner or the lender?
The owner and the broker.
Both. Okay.
They ended up raising a bit more capital, saying, hey, we're going to try this again. The lender required them to do a principal buy down, and they did the principal buy down, and still, I don't know the inside story, but nothing ended up happening. No renovations. Man. They actually didn't touch the renovation dollars that the lender had set aside for them. I don't know why. They didn't even tap into them.
After going back to their investors.
Wow. Without getting into the details, just weird stuff happens. The broker calls us a year later and says, hey, that property's back. You can buy it for $10.7 now because they had bought down the debt. And the lender will stay in and give you a very accommodative loan. And we knew the lender, immediately started talking to the lender, and the lender said, you know, we know you guys, we know you'll do great work, would love for you to come in and do this. They gave us an exceptional loan we couldn't get in the market. And we bought it for $10.7. So they had bought it for 18 in 2022. And it was off market. You know, it was a very
best way to do it.
Yeah, and we're working on other deals very similar right now, because now we have a bit of a reputation for the group that's buying right now, and we'll come in some hairy situations and buy them, and we'll run them well. And the other part is we do everything in house, and that matters to us. We're not just farming stuff out.
Right.
And they know we're going to do the renovations right, we're going to do the property management right. And
so is it safe to say that now lenders are coming to you saying, hey, we have this distressed asset?
It's mostly the brokers. So the brokers are kind of the middlemen, obviously. But then they connect us pretty quickly with the lender, and they say, hey, we got a weird situation over here. These guys owe more than they can sell it for. So, but we have a group that could come in and work with the lender, and then the lender, we're working on a deal right now where the lender's going to have to take $1 million write down. And we'll see if they do it. But so, the equity group's losing all their equity.
And so that deal, that you explained, that's the key that we promote. Relationships and reputation, man.
Yeah.
Like, that's how real good deals get done over the years. And, like, that was a prime example. And wow, have you spoke at our multifamily group, Jose? Have you not been here yet?
It's been a few years.
We got to get you in there.
Yeah.
Third Mondays of the month we do our multi.
Yeah.
So what's your
Yeah.
advice to? Because we're mom and pop, right? Single family, small multifamily, maybe under 20 units. So how, I guess that play is in play for us as well. So what's the kind of advice would you give to our group?
So there's a couple of things. So we have our minimum investment is $5,000 to participate with us on these deals. We also have a fund-to-fund program where if you, as a group, say 3 or 4 folks put together over $500,000 investment in our deal, you get a very aggressive promote. You get a lot of our upside, our profits. So there could be some great opportunities there. That fund-to-fund program has been, especially if you're someone who you have a little bit of capital on your own and you have several friends, you could pull that together and you could co-invest with us essentially on our deals. I think that for what we're seeing right now, there's not a lot of distress. It's not like the GFC in 2008 where there's foreclosures and stuff.
Abandoned houses everywhere.
Right.
Yeah.
And so what they say with multifamily right now is it's not distress, it's stress. There's stress going on, but it is a little under the covers, and so these deals are a little harder to find. So I think if I'm an investor, to be able to invest in some of these deals that we're getting is a pretty cool opportunity. We've been here a long time, so we have those deep relationships, and we can let you know more on that fund-to-fund group, how that works. But you can invest directly with us. The $5,000 is for a 12% preferred return, and it's capped at 12%.
Okay.
Then we have the next group is a $50,000 investment, and that you have to be a accredited investor for that, and you get some of the upside.
Okay.
And then we have the $500,000 group, which is pooled, and then you get even more of the upside. So we can give some of those details if folks are interested. We don't have a deal open right now. We just closed on our last one last week, but we're working on one. So we hope to get it out in the next. We're waiting for the lender, so you know how that goes.
Yeah.
But we're working on it.
So what do you do with that crowdfunding money or the Reg D investor? Because you're in a position right now where you don't have a deal that you're working on, but you're constantly raising capital. What do you do?
We aren't always raising capital. We do it on a deal by deal basis.
Gotcha.
So we're having a lot of conversations right now, just like this one, and then create an account on our website, get on our email list, and then once the deal comes out, we'll
share it.
You will share it.
All right. Perfect.
We got to wind down, man.
Yeah.
We can talk all day.
Any?
You need to come back.
Yeah. No.
Yeah.
You're always welcome.
We're
man.
just right up the street, so this is great. You guys.
Go ahead. Give the address. Where can we reach out to you?
Yeah, we're on 7th Street in Camelback. The best place is neighborhood.ventures. It's not .com. It's neighborhood.ventures, or just Google Neighborhood Ventures. But we're on YouTube. We're online. You can see all the offerings that we do. And we have a great team of folks. If you want to call up, you can go over our structure and spend some time with you. Now's a good time to kind of get your head around where the market's at and what we're doing. Because once we have a deal, then it funds pretty quick.
Yeah.
And we are working on deals actively right now. And we have one in particular that I like. It's near that Maryland one. We'll see if we can get that one over the line. But we're sticklers with the price.
Yeah.
So we're not just like, hey, we like the deal, let's do it. We're like, let's see if we can get a better price.
Yeah.
That's huge. That's why everyone gets caught. They get caught in the frenzy. They get all emotional. It's like buying right always saves you.
Yeah, and right now we have some leverage as buyers.
Exactly.
So we want to get the best price possible. You don't always have that, so you got to take advantage of it right now.
Awesome.
Great podcast, by the way.
Thank you.
Yeah, it's been fun.
No, I'm talking about you guys'
Oh, thank
podcast,
you.
the Neighborhood Ventures podcast.
Oh,
I follow
Yeah.
their podcast also. So guys, reach out to Neighborhood Ventures, right?
Yep.
Great content out there. You can find it everywhere, especially here in the Valley. Just Google Neighborhood Ventures and all your information will come up. So really appreciate you coming on the show
Yeah,
today.
thanks, Jameson.
Yeah, it's been great. Thanks for having me.
All right,
All right.
it's a wrap.
Yep.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Delprete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.